Good morning, ladies and gentlemen. A very warm welcome to you on this fantastic Good morning, ladies and gentlemen. A very warm welcome to you on this fine Wednesday morning on Dalal Street. The markets are in a deep shade of red, and my PCR team feels that it is because of this green tie that I am wearing, and I always tell them on Wednesday I wear green. So this is a totka that I have maintained for decades altogether. Be that as it may, the mood on Dalal Street, ladies and gentlemen, is in perfect health. Almost 180 points higher on the Nifty, 24,860. The Nifty Bank is adding 300 points. The Nifty IT index is up 214. And across the board, there is a very nice move that is coming in the markets. All 19 indices are in the green. 1751 shares are moving up compared with just 734 that are in the green. The top performing indices are the Nifty Realty and the Pharma index, up 1.5% each. The Nifty Auto index is 1% higher. The Nifty Next 50, Fin Services, Nifty 100, 200, 500, everything is in a deep shade of green. What we will do, ladies and gentlemen, is now get our honored guest onto the show. Mr. Mayuresh Joshi, Head of Equity Research at William O'Neill Securities, now joins us. Namaste, Mayuresh ji. A very warm welcome. The smile on your face tells me that you are enjoying this bounce on Dalal Street. What could be the possible reason why markets are in the green today, except for my tie, despite the fact that you have a net sell of 10,000 crore rupees on cash markets by our foreign friends?
Morning, sir. I think a couple of reasons why the markets witnessed profit booking a couple of sessions or 3 sessions back. The primary reason was the rising COVID cases across the globe. We're hearing rising COVID cases in Hong Kong, Singapore, a few cases reported in India. And the fear was whether this is a new variant, etc. But all the reports that we have been reading through, it just seems to be a milder version of what has happened currently. And I fingers crossed, I think hope it remains the same. The second reason obviously was in terms of Trump tariffs and the to and fro that is probably happening in terms of his policy making and the implied effect in terms of yields, specifically the US 10-year that has been taking place. And therefore, I think what happens as the June end deadline comes through in terms of the 90-day pause that Trump has given a large part of the globe, including EU, including China and other economies as well. How does that shape up? I think that is some element of jitteriness that crept in. But apart from that, my own sense is that a combination of these two factors might have created some element of an FII sell-off. But largely, I think from a macro as well as a micro perspective, we still believe that India probably still remains one of the best placed markets in the globe.
Okay. Mayuresh, I'll request, before we get into this bond deal discussion, I'll request the PCR to kindly fire the longer term chart of the Japanese 30-year bond, which hit a record high. The yield actually hit a record high as finances seem to be deteriorating in the Japanese economy. Their own Prime Minister has said that the macro balance sheet of Japan, the land of the rising sun, is now worse than Greece. Mayuresh, we've had this fear hitting Dalal Street earlier as well. The unwinding of the yen carry trade. One, what do you make of Japanese yields? Are they at dangerous levels? Will they impact us? And the risk of the yen carry trade unwinding again.
So that remains a risk, right? And therefore, I think to point out how the yen carry trade probably evolves over the next few months is going to be extremely critical because what that has a profound impact in not just how bond yields probably behave across the globe, but also in terms of a lot of emerging currencies to a large extent. Also, I think it has a direct impact in terms of how the Nasdaq probably behaves to a large extent. And therefore, I think if you probably peg all these important aspects put together, and if you probably have the 10-year, the 30-year, and the 2-year, not just in Japan, I think across the globe, even if you look at the US context, you look at the German bonds as we speak, I think all are reflecting a sense of cautiousness as we speak. And therefore, I think the kind of macros that can get played out, Japan as an economy has its own sweet problems as far as inflation is concerned in terms of growth dynamics over the past few decades. That probably gets amplified in terms of tariff impositions. That gets amplified in terms of the US debt and the Moody's downgrade that we probably saw, the interest servicing that the whole globe probably knows about. And therefore, I think the yields are an indication in terms of global growth, individual economies growth, which probably might remain circumspect for a combination of all these factors put together. But how they probably come out of all these issues altogether is something to be seen. Policy decision making is one aspect. And ultimately, again, I think whether we like it or not, if there is some element of macro issues that come through, I think monetary easing or liquidity easing starts coming back into the systems, which probably then means and makes us believe that if a worst case scenario is probably getting pegged in, or something like a bear case scenario in terms of global macros, liquidity might come back to support these economies as well, which might also fuel the kind of correction if it does come through in risk markets like equities, a decent opportunity for anybody who's probably missed it.
Okay, so that's the opportunities that we have as far as markets are concerned because of the Japanese yen carry trade. Remember, the cost of borrowing is so low in Japan that lots of foreign institutional investors borrow Japanese yen, convert it into rupees or dollars, and then invest across emerging markets. If the cost of borrowing in Japan rises, then what they have to do is either sell their trades in India or in emerging markets and then repatriate the money in Japan, or maybe take a currency hit at that point of time. So we have often seen when bond yields rise very strongly in Japan, globally a risk of trade happens because everybody then sells equities that they have purchased in Japanese yen or the equivalent and then buys back the Japanese yen to give it back to Japan. So that fear remains. Let's get Mayuresh to talk about Indian stocks. Mayuresh, when you look at the market around 7-month highs, what are the comfort levels that you are getting? What is research at William O'Neill throwing up in terms of good quality stocks post their fourth quarter earnings? What has been your experience with Q4?
I think it was on expected lines. So if I have to have a sectoral breakdown, BFSI had a very good show, Shell sir. I think a large part of the BFSI pool, whether they are banking stocks, insurance stocks, select NBFCs, have all performed decently well. So BFSI as a space was expected to perform well, has done that. IT was always expected to be a little bit subdued, and the dampening numbers that we've probably seen. With cautious commentaries is something that the street probably believed. A few of the mid-cap IT stocks were relatively outliers compared to the overall space. But again, I think it all really depends in terms of relative performance, in terms of what happens with tariffs, what happens with discretionary spending back in the US and the EU zone, and how respective sectors thereof are expected to bounce back, whether it's BFSI, whether it's manufacturing, or whether it's retail. For consumer discretionary and consumer durable, I think the consumption slowdown that we had witnessed was expected to carry through in Q4 as well. But a large part of market expectations is, and whether I bucket that in FMCG, apparel players, footwear players, luggage players, as an example, is Q1, Q2 with tax cuts expected to come through, with better monsoons, rural consumption expected to come back. The second half might actually be better off in terms of volumes, pricing coming back for a whole host of these consumer discretionary and durable names. So management commentaries are optimistic based on these arguments as well. Capital goods clearly lag, but to a certain extent, the government capex coming back very, very strongly. Expectations of private capex at some point of time expected to come back in the second half would probably mean that selected players within this space remain strong. As far as domestic themes are concerned, whether you're talking about agrochemicals as a space, which we clearly like, the expectations in terms of volume growth expected to remain strong. The expectations in terms of input costs expected to remain stable might actually mean operating leverage playing on balance sheets. And therefore, this space probably looks very, very interesting. Overall, I think the numbers have been decent in terms of market expectations. Our own sense is that Q2, you should see bottoming out for a large pool of market sectors bottoming out, and second half actually starting to throw up in terms of better numbers. So I think second half is where we see a strong earnings recovery come through. And that's where our argument probably lies, that from a macro perspective, we are far better off than a large part of the developed and the developing world, or the emerging markets, as we call it. And on the second hand, the supporting factor of micros or corporate earnings should cards coming through very, very strongly as we speak in this time.
Okay. Mayuresh, I would be failing in my duty if we don't discuss the defense space post this flare-up that happened within the at the border between India and Pakistan. Now, what is your understanding in terms of is there a tectonic shift? I mean, we are seeing BEL at record highs, BDL at record highs. So essentially, those who make electronic defense equipment plus those who make missiles and artillery shells are doing well. Nothing much is happening on HAL. How do you read this dichotomy?
So two things. First, I think kudos to the Indian Armed Forces for the resounding success of Operation Sindoor, shall say. I think what we have displayed in terms of our indigenous technology, the entire Atmanirbhar schemes that came through for a lot of defense companies, that a lot of our defense companies are now producing world-class products as we speak. And therefore, I think the opportunities are twofold. One, in terms of the enhanced budget spending that has come through post-Operation Sindoor, the 40,000 crore additional kitty that has come through, more orders expected in the way of defense companies as well. The second element is they're already sitting on decent order books, which means that the revenue visibility over the next 4, 5, 6 years probably remains intact. Now, these orders are coming with decent margins. The only risk factor for these companies I've time again mentioned is execution. But with strict timelines to adhere to from the deadlines that the ministry might have actually given them, I think execution should also continue at a decent pace. Now you've got aircraft manufacturers, you've got ship manufacturers as well, you've got drone manufacturers, you've got, as you said, artillery shell manufacturers, you've got weapon component manufacturers as well. And therefore, I think this whole pool might actually start doing well. Which brings me to the second aspect. Europe is actually looking at a budget spend. There are so many countries who, after Operation Sindoor, are looking at the technological prowess in terms of these indigenously developed technologies that our companies have probably delivered. And therefore, exports as a pool can also come out to be a surprisingly big opportunity for these players with far better margins as we speak. And therefore, I think there is a huge opportunity in front of them. And therefore, these companies might do well. BEL, anybody having should hold on. I've always maintained my stance on shipbuilders, expected to continue doing well as well.
Do valuations in this pack worry you? Are we in the momentum frenzy?
Valuations are on the higher side, Chelsea, but I think it's all going to be a play in terms of top line growth, and if top line growth is expected to continue at a decent pace, I'm not expecting an exponential, outrageous growth happening year-on-year basis as well. But even if it's a decent growth coming through with better operating leverage, I think those premium valuations might just sustain, assuming that numbers still keep on coming from the balance sheet.
Fair point. We go through these bouts of buying frenzy and then maybe a rest. We've
Yeah.
already had a fairly decent correction in many government PSUs on the defense side, and maybe it's time again to check out some good points there. For the record, BEL at a record high today, 377.15. It's also the second most active traded counter, 1500 crores traded, followed by Cochin Shipyard, Mazgaon, and Hindustan Aeronautics. So second, third, fourth, and fifth rank in terms of volumes are by defense counters. Garden Reach is, I think, on the 9th, still 3.5% higher. BDL on the 11th. So this is how the entire defense pack is concerned, and this is only and only the government PSUs where order flows, equipment concerns are no longer there. The fantastic performance of Akash Tir and the entire electronic warfare suite made by the BAL performed fabulously. Mayuresh, as we continue this defense discussion, is there a private sector defense play that you think should be considered at this point of time? Maybe drone makers. Zen Tech is already up maybe 40-45% in the last 7-8 trading sessions. Very strong numbers. How about Idea Forge? Anything that you would want to discuss in the private defense contracting space?
No, so Zen Tech has done amazing work as far as Operation Sindoor was concerned, and the management sounds very optimistic as well. So I think, yes, this is one stock if anybody holds should continue holding. And something like Paras is something that we like Shelter in the space as well. I think the kind of numbers that Paras has, the expectations in terms of execution expected to continue at a decent pace, return ratios remaining strong, and balance sheet remaining extremely strong is something that we are probably liking at market spending.
Okay. Paras Defense, ladies and gentlemen, makes the lenses that
Yes.
are used in satellites, that are used in high-end optical defense devices to see the distance. So Paras is okay, something that we can start tracking. This is Mayuresh's favorite in the private defense contracting space. It's actually defense and defense all the way. Garden Reach is now 4.6% higher at 2,503, actually 3.4% higher today on the cash markets. You have Bharat Dynamics. I would imagine this is again edging towards a record high, 2.2% higher, 1835. This is a space that is doing phenomenally well. Mayuresh, a view on the banking space. Will public sector banks follow suit when it comes to the kind of rallies that we've already seen in the private space? A top pick apart from SBI?
So they should. And again, Shelter, I think what's really transpired is the kind of consistency in terms of reported numbers. So CASA deterioration is hopefully behind the entire system as a whole, including PSU banks. What you're seeing is cautious underwriting as far as advances growth is concerned. RBI has given ample support as far as liquidity is concerned as well. And therefore, with the expectations of a rate cut cycle in the second half, would probably mean that better liability franchise banks, banks having better capital adequacy, can actually start performing well. Also, let's not forget that for a large part of the PSU pool, it works on two counts. One, I think the recoveries that a lot of managements are speaking about, if they are substantial, I think they become a direct addition to the bottom line. And let's not forget in terms of the yield movement, the AFS portfolios as far as the treasury book is concerned, obviously aids the overall numbers as well. Valuation wise, also, I think reasonably placed from a rating, ranking, institution holding, canceling perspective. I think a few of the banks are selectively well poised as well. So outside State Bank of India, again, our own sense is Bank of Baroda, one of the stronger leadership stocks within the PSU pool. All these parameters that I'm talking about can be expected to see growth in the coming few quarters as
well. Okay. 11:24. We are close to the allocated half an hour that we have. Globally, the risk on trade, Mayuresh, is back with a bang. What are your global peers telling you about this US-China trade pact that has happened? How are you looking at crude oil prices at this point, and maybe a view on gold?
So two aspects. One, I think our global research team just published a note a couple of days back, and their own sense is that there should be a very decent resolution, not just with China, but the rest of the globe as well, as far as tariff policies are concerned. And therefore, I think tariff policies will largely be done and dusted as we end June. Crude expected to stay benign for two factors again. I think the recovery in terms of demand globally should probably be back-ended, which means that you might not see an immediate demand coefficient come through, which means again that crude might just possibly stay in a range, which again aids India to a large extent because our current and trade account deficit goes down quite significantly, even with the offset of a depreciating rupee. From a gold perspective, again, I think the expectation in terms of what happens in terms of the US debt, whether that balloons, the interest payments which have crossed $1 trillion on an annualized basis, how does the government probably gap that down? And any fear in terms of tariff impositions at the end of that June window, whether there is no negotiations done with China or otherwise, which might again revert that global growth comes circumspect to a large extent, might just have some element of an interest generated in gold. But I think gold has gestated to a large extent all the positives that have probably come through. A substantial rally from these current levels, at least from a near-term perspective, is something that I'm ruling out at least at this stage.
Okay. With that, Mayuresh, thank you so much for your time. We'll meet in person shortly in Mumbai. Have a great day forward, and of course, let's hope second half of calendar 2025 is better than the first half. Thank you so much for your time.
Oh, absolutely, sure. Always a pleasure to be on your show. And yes, second half will be definitely better. सारे जहाँ से अच्छा हिंदुस्तान.
क्या बात है. With that lovely thought, let's call it a day as far as this discussion is concerned. I'll be back at 1 p.m. with more news, this time on solar industries. But for now, stay glued on Business Today Television. There is a hell of a lot of news on the other side of the break. Have a nice day.
Top Indian fashion retailers have pulled Turkish brands from their platforms.